You think about the cities you'd like to be in right now or the places you'd like to visit, they're typically not economically optimal, but they're nice places.
The big idea I want to talk about this morning is really the opportunity that's created by the gap between the value that science tells us exists in nature, so the financial value of natural systems, a stable climate, resilient living systems, and clean water, the gap between that kind of value and the actual value that people get through real estate and natural resources investing.
Humans want to live in nice places, not optimal places. Most socially good solutions are not optimal. Most societies you'd want to live in don't maximize economic utility on some parameter. So when we think about the kind of society we want, the kind of planet we want to live on, I think we do have to set aside some of this talk of optimality, and that means a long and somewhat difficult conversation with public markets.
And they've come up with ecological economics techniques like contingent valuation and hedonic valuation and these sorts of things. But the problem is that that did not lead to an actual change in behavior because that value was purely theoretical and people weren't actually getting paid. So I view the big challenge as translating that scientific reality into terms which investors can understand. The main driver for our investments at Ecosystem Investment Partners is the Clean Water Act and the no net loss of aquatic resources provisions in that law. So for 20 years now, private investors and private landowners have been providing outsourced compliance under the Clean Water Act. Over 1,000 companies are now active in the space. Over 1 million acres has been restored of private land with private capital in the U.S., and it's about a $3 billion a year annual market. If sustainability is a meaningful term, it means production of products and services in fundamental alignment with natural systems. And to the extent that natural systems are actually included in that equation, then we are going to price the value of a stable climate. The convergence from sort of the top down and the bottom up that's happening in 2013. So you've got at the top, fiduciaries of large institutional investment pools of capital that recognize the kinds of issues we're talking about as being, real business issues. Environmental and social things are no longer sort of just the pontoon on the boat. They are the actual boat itself. These social and environmental issues, I'm reminded of a quote from the chief investment officer at CalPERS a few years ago who said, I'm the chief investment officer for a pension fund with a 30-year time horizon. We've got to meet the needs of our pensioners over 30 years. And if you don't think global climate change is a fiduciary issue over a 30-year time frame, then you're just not paying attention. It strikes me that we're at a turning point in terms of changing that dynamic between the policies that create a level playing field or a competitive advantage for a progressive agenda and the policies which don't. And what I mean is, so at EIP, we're able to make a return, a risk-adjusted return for our investors because of the provisions in the Clean Water Act. So the Clean Water Act allows private investors to provide cost-effective compliance, essentially outsourced compliance, that's much cheaper and higher quality than they could do for themselves. So that's a mechanism built into policy that then allows capital to flow. And I think whether we're talking about environmental policies like that, or tax law, or other social and labor law policy, we have to engage policymakers to internalize these externalities to allow a level playing field for investment that actually delivers the kind of results we're describing here, we're desiring. But I really think that it's the rules of the game that need to change and that cannot change until they see that capital can really flow to solve the problems.